एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामंशो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्द्वैता 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 एतद्द्वैता.
Speaker of the day, CA SONY here, Secretary CA Martin Joseph, other committee members, and my dear members. Welcome all to today's seminar. The subject matter of the seminar is Compliances under Companies Act 2013. A company which has been incorporated in India must ensure compliance with the Companies Act 2013. The Companies Act 2013 regulates appointment, qualification, remuneration, and retirement of directors of the company. Aspects such as how to conduct board meetings and shareholders meetings, the preparation and presentation of annual accounts, and the regular maintenance of books of accounts. Besides all this, we all know that year after year, MCA is incorporating various complaints. Many of us are confused on its due dates, whether we have to file all this in on yearly basis or one-time return like that. We will get a better insights on this from our speaker today. Once again, I welcome all the members who have joined us physical and online today. Thank you.
Thank you, Rajneesh. Now I invite CA Praveen Narayanan, Chairman, Kollam Branch, for the introduction of the speaker.
Thank you, Martin. Good evening, respected speaker, CA SONY here, Chairman of Auditor Branch, CA Rajneesh, Secretary of Auditor Branch, CA Martin Joseph, Secretary of Kollam Branch, CA Sabu CS, other managing committee members of Auditor and Kollam branches, respected senior members, and dear friends. A very good evening to one and all. We are extremely honored to have CA SONY here as a speaker for the evening. Our speaker does not require an introduction at all. He is a well-recognized personality among the CF fraternity in Kerala, and I feel elated to introduce him today. CA SONY is a science graduate and a fellow member of ICAI, practicing at Thrissur since 2001. He is also graduated in law. He has completed some post-qualification courses from ICAI, namely Diploma in Information System Audit and Diploma in International Trade Laws and World Trade Organization. He served as Chairman of Thrissur branch of SIRC during 2011-12. During that period, the branch secured Best Branch Award in the regional level and Best Commendable Performance Award in the national level. He is a renowned faculty for company law, ROC filing, GST, etc. at various branches of ICAI. He is also a faculty for financial projects, budgeting, and GST at MSME Institute and DIC. He is an active member and past president of TMA, Thrissur Management Association, an association affiliated to All India Management Association, AIMA. Presently, a member of AIMA Council, the apex body of management profession in India. With this small narrative, I am introducing our honorable speaker of the evening, C.S. SONY sir. Over to you, Martin sir.
Thank you, Praveen. Now I invite CA SONY CL to take over the session and all yours, sir.
Thank you, CA Martin. Respected Chairman of the Kollam branch, CA Praveen Narayana, Chairman of Alapura branch, CA Rajneesh, Martin Joseph, Secretary, Alapura branch, John Matthew, Vice Chairman, Alapura branch, Hindu, and Secretary of Kollam branch, Sabu, Vice Chairman, Deepu, immediate past Chairman, Srinivasan and Dilip, past Chairman of Kollam and Alapura branch, galaxy of chairmans here, senior members of profession, and my esteemed professional colleagues. At the outset, I thank Chairman of Alapura branch, CA Rajneesh Murthy, and Chairman Kollam branch, Praveen for, and entire team of managing committee for giving me the opportunity to present the topic, Complaints under Companies Act 2013. Before the learned members of Kollam and Alapura branch. Today, we are going to discuss on the various complaints under Companies Act. I sincerely hope that you are coping well in these difficult times and take all necessary precautions to stay safe and healthy. Hope you and your family are safe and healthy. The last couple of days, the infections of corona in Kerala is increasing in alarmingly, and we should protect our family members, our office staff, and our dear. I am extremely happy to address and interact with our beloved members of Alapura and Kollam, which is active and vibrant parts of SARC. I know you are all tired after a long office hours. Thank you very much for your keen interest in attending this webinar. I know many of you have started your today's office hours, maybe from morning 8 o'clock or 9 o'clock. You are tired. Last a few weeks back, we had Navaratna webinar, a series of webinars, where we discussed a lot on Companies Act and other subjects. Today we are going to discuss on this particular subject because of this importance, because many of our chartered accountants are practicing in the Companies Act area. Some of them are practicing and specializing in GST and income tax and so on. So this is the time in which we have to discuss on the annual complaints and other complaints relating to companies. Due to the lockdown and related restrictions, we are.
Hello.
Am I audible?
Yes, sir. Yes, sir. Yes, sir.
Due to the lockdown and related restrictions, we are not able to physically meet. Certainly, we will meet soon. Members of Kollam and Alapura branch always give me wholehearted support and encouragement of all my professional endeavors. I seek your continued blessings and support in future too. Both Kollam branch, Alapura is scaling more heights by organizing more and more number of programs for the benefit of members, students, under the able leadership of young chairmen Rajneesh and Praveen Narayan. Become the chairman and carry out the activities of the branch is very difficult, even in normal times. The managing the branch extraordinary time, this challenging time like this, we need extraordinary people, extraordinary chairman and committee to lead the branch. The branch is very lucky to have the chairman like Rajneesh and Praveen. I congratulate both of them for leading the branch in this challenging time with lot of programs for the benefit of the members and students. If it was a physical meeting, we would have been able to meet and interact each other in a better manner. But anyway, the webinar is the one of the option so that we can meet each other. Anyway, as rightly pointed out by the chairman, Rajneesh sir, it is very important to know about the various compliances with respect to the Companies Act. So today I am going through this topic. For the last many years, I have practicing this particular area. So I would like to share some of the thoughts with you. And I can also learn from you because you are all practicing. I know you are all practicing in this particular area. Today, my session is dealing on the compliances of the Companies Act. I will categorize this into annual compliance. Some of the compliance we need to carry out annually. Some of the basic compliances, whether it is some of the compliances is required irrespective of the fact that whether it is a one-person company, whether it is a small company, whether it is a listed company, and so on. Similarly, some of the compliances are event-based. And I also have included other compliances, which some of the compliances which may need during our practice. This is the session plan today. And we'll have a interaction or question answer session at the end of this session. With the permission of the chairman, let me share my PPT.
Yes, sir.
Yes.
Yes.
The screen is visible, sir.
Yes, sir.
Okay. So let us move on to the topic further. Nowadays, our income tax and GST practice, like some of our audit is already gone from the GST area. And now the turnover limit for the income tax also increased. The Companies Act is a lucrative area, but some of our members not at all concentrating in this area. So I suggest all of you to come to this area because it is many of the compliances are annual based and the competition in this area is much less, even though some specialized professionals are there. As of now, total companies registered in India is around 20 lakhs, of which 7.5 lakhs has been closed, and some of them are dormant companies, inactive companies are there, and effectively around 2 lakhs companies are there in India. So we, our members throughout India is around 3.5 lakhs. So we have ample scope in this particular area. Now let us move to the agenda of today's meeting discussion, the annual compliance. Then we'll move to the event-based compliance, and we will slightly touch upon some of the basic compliances and other compliances. This is the agenda for the today's discussion. I know many of these points which I am discussing may be repetitive for you, but some of them are, it may be useful also. this annual complaints, we are going to discuss about the annual return, MGT7. For the many years, we are using the MGT7, but this year there is some change, and they have introduced MCA has been introduced MGT7 for the small company, etc. We will discuss in detail in a short while. Then form AOC form, then DPT3 form, then DR3 KYC. Then we'll discuss about MSME half-yearly return, and we discuss upon the DR8 and form AOC2 and form MBP1. These are some of the forms which we need during our practice, or to be verified, to be prepared, or to be filed to the MC. Let us move first to the MGT7 and the MGT7A. Okay. Here, the Act says MGT annual return should be furnished, whether it is a public company, private company, one-person company, we have to file the annual return. Okay. This year, what has happened is they have inserted an amendment by which small companies and one-person companies should file form MGT7A for the year 2021. That is a change happened this year. Okay. Earlier, we used to file only MGT7 for irrespective of the fact that the company is a small company or a one-person company. Okay. So annual return can be classified into two. One is MGT7A for the one-person company and small company. Other one is form MGT7. Hope you are clear. I will repeat once again. Every company need to file the annual return. Okay. This year, for the small companies and one-person company, required to file form MGT7A. Rest of the companies can file their return through MGT7. Okay, let us move further. What is happened? Some of the definition for the small company has been changed. Now we will discuss on that aspect the definition of the small company. Okay, earlier we used to treat all small company where the paid up share capital does not exceed 2 crore and turnover limit for the immediately preceding year, here not exceeding 20 crore. Sorry, till last year it was 50 lakh and 2 crore. Now present paid up capital limit as well as the turnover limit is like this. Paid up share capital does not exceed 2 crore. Earlier it was 50 lakh. And not all, both conditions should be satisfied. Turnover limit for the immediately preceding year. That is, we have to consider the turnover of the immediately preceding financial year. Earlier it was 2 crore and now it is 20 crore. And from which date it is applicable? As per the notification, this increased limit shall apply with effect from 1st April 2021. That means it is for financial year 21-22. For the internal financial control or care or whatever may be, this turnover limit, which is enhanced now, 2 crore for paid up capital and a turnover 20 crore will be applicable from 1st April 2021. It means up to 31st March 2021, the old limit remain. The small company definition, the old limit is 50 lakh. As you know, 50 lakh paid up capital and turnover limit does not exceed 2 crore. So this is the one of the other change happened this year. So please keep it in mind. this particular change. Okay. Earlier slide we discussed small company need to use the form MGT 7A for filing the return. In the MGT 7A form, there are some of the issues is there, as like our income tax website. Many of them are trying to upload the income tax registration for trust, trying to file the income tax return. Sometimes we succeed, many times we failed also. Maybe by 15th of this month, income tax website will be ready. Similarly, some of the issues is there in this MGT 7A form also. Many of the errors has been already reported to the MCA. We hope it will be rectified soon. Similarly, let us just see one person company as its name itself. One person company means only one person as member of the company. Okay, fine. So I will repeat again, the small company, the definition has been changed from 1st April 2021. The first point. Then paid up capital limit enhanced from 50 lakh to 2 crore. Turnover limit also changed. Am I audible?
Audible, sir.
Yes, sir.
Yes, yes. Okay.
Yes, sir.
Okay. Okay, then let us discuss what are the other changes happen in the annual return. You know, the basic timeline is 60 days from the annual general meeting or due date of AGM. If AGM is not held, that chances are very rare. In some of the companies, it may happen because of the accounts are not ready in such situations. Then some of the important points which you should keep in mind in this time. Some of the details which we already entered in the annual return, that means the previous year, has been deleted. One of such information is the indebtedness of the company, like debentures, bonds, etc., need not necessary to include in the annual return. Then in the case of foreign institutional investors, we used to give the name, address, and the country of incorporation, etc. Okay, that also deleted from the annual return. Then do we have the requirement of annexing extract of annual return to the board report? Many times, always we used to keep the board report along with the extract of annual return in form NG9. So that also done away. Then other change which has happened is furnishing of annual return in company's website. It is already there, mandatory to place a copy of annual return on their website and provide the link in the same the board reports. And in case company is not having the website, now it is not required to mention the web link for the annual return in their board report. It can be considered a good practice. That is, if you show in the board report like this, pursuant to section 92(3), company does not have website, so there is no requirement to give the web link of annual return. This is a suggested presentation in some of our companies in which the website is not there. We are just putting this sentence in the director's report. So in case company does not have any website, no need to give the information in the director's report. Remember that it is suggestive to give these sentences. The pursuant to section so-and-so company does not have any website, so there is no requirement to give the web link in the annual. Okay. So these are the some changes which suggested in the by the MCA in the annual report. This fact, some of the members asked me in the case of Form 7A, who is required, whether a chartered accountant is required to pay, nothing required. Company secretary not required. OPC and small company, the director of the company can sign. The other companies, it can be signed by the director and company secretary. In case there is no company secretary, director of the company and the company secretary in practice can file the return. That is MGT 7. Anyway, the form itself take care of this fact during your checking, pre-scrutiny, etc. Then now I am just giving some of the attachments should be there with MGT 7 and MGT 7A. In the MGT 7, there is a slight change that will also be discussed. The list of shareholders, dependent holders, and mandatory in case company having share capital. Similarly, in case any extension of AGM is there, then we have to attach that also. These things, I'm not going into the detail. The relevant change is the list of directors. In case small company, we have to attach this also, list of directors. Last year, it was not there. This year, it is included. MGT 7A, list of directors, mandatory in case form is filed by small company. Okay, let us move further. The AOC 4, everyone know the AOC forms. Every company is required to file the AOC 4. In case you have to consolidate financial statement, then that form is AOC 4 and CFS. And let me move to, if it is an India's company, there is a separate form for AOC 4 and BFC. And AOC for consolidated financial statement is there for NBFC India's companies, that they have to for AOC for CFS and BFS. Okay, I'm just touching about the various forms in the AOC 4 category, because some of the members having doubt that whether I will use this form or XBRL form, etc. So in the case of here, the XBRL form, it should be used by every company whose paid up capital is greater than or equal to 5 crore paid up capital. So, or turnover more than 100 crore. Apart from that, every listed company is required to file AOC 4 in XBRL form. Every company is required to comply with the Ind-AS. Okay, these are the companies should use the XBRL form. And the exemption is given for the housing finance companies, non-banking financial companies, companies engaged in the business of banking and insurance sector. So these are the categories of AOC 4 form for filing the financial statement. Just instruct your article or who is doing the particular work. These are the 3 forms is there. You should check all these aspects. Then due date, of course, in the case of annual return, it was 60 days. In the case of AOC 4, it is within 30 days of due date of AGM or due date within which we should have conducted the AGM. There are some situations where financial statements are not adopted in the AGM. There are changes are there. In such a case, unadopted financial statement shall be filed within 30 days of the date of AGM. Suppose in some of the cases, due to various reasons, the audited financial statements not able to place before the AGM. Okay, AGM is conducted, but audited statements not able to placed. In such a case, it should be unadopted financial statement should be filed within 30 days of date of AGM. Okay, in case of OPC, it is 180 days from the close of the financial, that is up to 30th September. some of the incidents with the interruptions of the tribunal, etc., we have to revise. In such a case, we have to revise the financial statement and should be filed. Okay, then I'm just quickly going through the attachments of the financial statement of the entity as per the Companies Act. At this time, board report should not contain MGT9 extract of annual return. So we can discontinue attaching the MGT9. Then, of course, we have to attach the AOC2 particulars of the contract arrangement with the related parties, audit report, and other documents. In case your company is falling under the corporate social responsibility, we'll discuss which are the companies which will fall under this corporate social responsibility in a short while from now. In such a case, we have to attach the CSR report also and the details of remaining activities. In case you have engaged any other entities, some Section 8 company or any other NGOs for conducting your corporate social responsibility, then that also to be details of that also we have to attach. This is applicable in the case of companies in which corporate social responsibility is applicable. Okay. Then rest of the things are exceptional things. I just for the academic interest, I have put it here. In case AGM is not called, then the fact and reason for that not holding the AGM has to be given. Then approval for if there is extension of AGM, then approval letter of extension of financial year or AGM. Then supplementary test audit report under section 143 CAAG is there. Then that also will be attached. Okay. Then just briefly, after the decriminalization, the penalty or prosecution of everything discarded. Now the penalty is ₹10,000 in case of continued failure, 100 per day during which the such failure continues, and with a maximum of 2 lakhs rupees. That is for the company, and for the MD and CFO or director of the company, the officer in default will be also liable for a penalty of 10,000 and 100 per day during which such failure continues, and it is a maximum of 50,000. That is about the penalty. This is apart from the additional fee in case of filing the return belatedly. That's about the annual filing of annual return. MGT7 for the small companies, it is small company as one person companies MGT7A. Then AOC for about the annual financial statements. Okay, fine. Now let us move to the return of deposits. Every year we used to file this DPT3 before 30th June. Last year and this year we have got some relief due to the COVID. One question always arises whether we should file the DPT3 form. Okay, it is mandatory for every company to file the DPT3 form, even it is a deal return. But those companies which are exempted are government companies, banking company, NBFCs, and housing finance company. These are the companies which is exempted from filing the DPT3 form. So, in case you are auditing a government company, no need to file the DPT3 form. If it is a banking company, no requirement for filing the DPT3. Some of the NBFCs are under the impression that they have to file the DPT because they are under regulated by the RBI. It is not required to file the DPT3. The Act itself given specific exemption to this government company, banking company, non-banking financial company, housing finance company, and companies which is provided by the central government. The due date which I have mentioned here is the normal due date, that is the 30th day of June. Don't worry, this year they have accepted the timeline for filing all the returns without additional fee. We have sufficient time. Don't worry. So, other years, suppose next year the COVID impact, nothing is there. Please remind that we have to file the DPT3 form before 30th June. of every year. There are some practical issues in filing the DPT3 form within June 30th because our audit may not be concluded. Many of the companies' audit may finish in the month of August, July, etc. Then in such a cases, we are finding it very difficult to file the DPT3 before the due date. Okay, let us see how practically solve these issues. In the DPT3, I am taking a little bit further because there are confusion there. Many of the companies are not accepting deposits, but same time, they have amount received, but it is not treated as deposits as per the rule 2C of the company's acceptance of deposit rules. So in the DPT3 form, when you are looking for that, you can see 4 types of returns. I've showed it in one of the slides that details. So even though you are not accepting the public deposit or you are not accepting company accepting the deposit, still if you are receiving any amount which are deposit, which are not a deposit as per the definition of the rule 2C of the company's acceptance. Let us see what are those circumstances. If the company receives some amount from the central government, state government, local authority, etc., it will not be treated as deposit. Then receipts from foreign government, foreign international banks, etc., it won't be treated as deposit. These are the amount which you may feel it is a deposit, but actually it is not a deposit. Okay, provided the former portions of the act should be complied. Then loan from the banking company, State Bank of India, etc., not treated as a deposit. Okay, these are the amount which will fall under the rule 2C. Okay. Then public financial institutions and amount received against a commercial paper as per the RBI directions that you not consider as deposit. Let us move further towards subscription of securities. Here, many companies, we are receiving the share application money. We have to issue the share for those against the share application money within 60 days. In case you are not able to file the return within that, allot the shares within that 60 days, you have to repay that amount within another next 50 days. That is a condition. If you fail, then it will treat as a deposit. So if you received, your company received any amount towards securities like shares, equity shares, preferred shares, etc., you should kindly see in your balance sheet. Some of the companies, we are seeing that still there is an amount laying as share application money pending for allotment without considering the changes happened in the Companies Act 2013. This is happening in the old companies. Some of the companies, due to some reasons, they didn't look into this aspect. So please keep it in mind. In case you have received, company has received any amount towards issue of shares, securities, etc., you should ensure that you have allotted the shares within 60 days. Then the common question every time is coming is the amount received from the director of the company is a deposit. No, it is not a deposit. Similarly, in the case of a private company, even if we receive from the relative of a director, that also will not come under definition of the deposit. The question may arise, a private limited company received, accepted an amount from the relative of a director, it will not fall under the deposits. In the case of public company, amount received from the relative will fall under the deposit. This exemption, the director of the company or relative of the director for the private company, in the case of public limited company, is only director of the company. Okay. Just public company, you can accept money from the director. It won't fall under the definition of the deposit. As per the rule 2(1)(c), it is a deposit, does not. And in the case of private company, you can accept it from director as well as the relative of director. Hope it is clear. And the important point is, many of the companies, this is happening, frequently happening. The director giving amount, but with a condition that you should get a declaration from the director or relative of the director that he is not given this amount out of the fund acquired by him from borrowing or accepting loan or deposit from others. I think you are clear. We can accept the money from the director, provided we should get a declaration from the director that the funds are acquired by him by borrowing or accepting loan or deposit from others. In one of the company where we are doing the audit, it is happened like this. The audit we will conduct yearly after the 31st March. That point of time, this director has been brought money to the company, and we ask the company to get a declaration and put it in a file so that the deposit rules will not be contravened. Okay, because a director should give a declaration that it is not out of the borrowed money or accepted deposit, etc. Okay. So this managing director saying that, sir, if you have mentioned this fact at the beginning of the year, we should get this declaration. Now this director saying that he is brought this money out of the borrowed fund. Like that, they will say, as per their convenience, they will say like this. So please bear in mind, in case any money is brought in by the director or relative of a director in the case of a private company, and in the case of a public company from the director, you should get a declaration from that effect. Because if time changes, these people will also say a lot of excuses without giving this declaration. So this is a one of the conditions. Then also we have to mention this fact in the board's report. We have to give the details of this for the details of money, so I have to accepted in the board report. Fine. Then let us see, any amount raised by issue of bonds or debentures will not fall under the definition of the deposit. In the case of non-convertible debenture, not constitute a charge on the assets of the company and listed on a recognized stock exchanges also will not fall under this case. Then some cases we used to get some money from the employees as a security deposit, etc. So please keep in mind the threshold limit for that. Any amount received from the employee of the company not exceeding his annual salary under a contract of employment. That is, it should not be exceeded annual salary of that particular employee. And apart from that, it should contain any interest part. That is not interest bearing security deposit. Okay, that is the condition for receiving any amount from the employee which won't fall under this particular clause. Any interest bearing amount received held in trust. Any amount received in the course of for the purpose of company with some conditions are there. We can receive amount from for the purpose of the business, advance towards supply of the goods or portion of a service, and finally it is appropriate against the goods or portion of the service within a period of 365 days. You can hold only up to 350 days. Okay, if it is exceeded that day, 65 days, then it will fall under the definition of the deposit. Then advance account in any manner received the consideration of immovable property. If some amount is received by the company for the advance for a immovable property, that will not be treated as a deposit. Then security deposit performance of a quarter supply of goods, professional service. Okay, advance received under long-term projects for supply of capital goods. Advance ways providing future service in the form of warranty, maintenance, etc. If the period of providing such service does not exceed the period prevalent in common business practice or 5 years from the date of acceptance of such service. That is, we can accept the advance towards the future services up to 5 years or common business practice. It may be 1 year like that. That should be taken care. Then advance received and allowed by sectoral regulator, that will not be treated as deposit. Publication of the journals, etc. Any amount brought in by the promoter of the company, some situation promoter required to bring some money as an unsecured loan with the stipulation of the lending institution. In such a case, it won't be treated as a deposit. And if after the stipulated period of the banking company or financial company is over, then this amount has to be repaid. Then amount accepted by the Nidhi company and amount to be subscription of a cheat company will not be treated as deposits. All these categories of the situations which is mentioned here will not be treated as deposits. I am pressing upon this point because of many of the members are now filing the DPT3 form. Many of them have doubt in this respect. That's why I'm getting the details of this area. Then startup company which is received 20 lakhs as a convertible note and later converted into equity shares, then it won't be treated as a deposit. Okay. Then promoter for the company for unsecured stipulation lending session that we have discussed a little bit ago. So these are the conditions where even though companies accepted or received money from these parties, it won't treat it as a deposit. And we have to give these details in the DPT3 form. The important point is if you are receiving amount from director, that is a normal business practice, amount received by a company from a director, then we should get a undertaking or letter from the director that it is not from the borrowed company. This is one of the major fault I found in many of the companies. Okay. Then the one-time return, even though for the academic interest I have explained this about the one-time return. One-time return, the time is already over. Return of deposit. These are the 3 categories of the bubbles which you can see in the DPT3 form. That is one-time return, the period is over. Return of deposit. Suppose your amount received not fall under the above category, then it will come under return of deposit. Sometimes it may be return deposit from members. It may be deposit from public. Only public company with a certain category of the conditions can accept the deposit. Then can accept the deposit. In such a case, you can choose the bubble 2. Similarly, particulars of transaction by a company not considered as a deposit. Okay, that is as per rule 2C of the Companies Act. We have discussed just a while ago, we had discussed all these conditions. That is third bubble is for that. Okay, in case you have received any money from this category, the above discussed category, then you have to choose the 3. In some situations, company might have received the return of deposit as well as of the return, this amount of money received which is exempted under 2(1)(c). In such a case, we have to use the form. So that is the purpose of the 4 bubbles in the form. Okay, let us move further. The one-time return, the time is already over. All our companies, as we find the left-hand side, no need to worry about that. The second side, this is a regular return which we are filing right now. Okay. Only one thing is in the case of regular return, that is return of deposit in DPT3, if any deposit is accepted from outside is, that is public deposit, then audit certificate is compulsory. Okay. In the case of acceptance of money, as per rule 21C, that is the one which we were discussed earlier, no audit certificate is not compulsory. Some of the professionals are asking for the auditors to give the auditor certificate in this regard also, but many of the experts saying that it is not compulsory. It is compulsory only if return of deposit is accepted. Okay. So it is compulsory in the case of bubble 2 and bubble 4. Just now we have discussed bubble 2 and bubble 4. Let us see. I have a format also. I will show you later. The other important points. So DPT3, every company required to file the DPT3. We have to give the details of the return of deposit, if any. If no return of deposit, we have amount of money received which is not excluded as deposit under rule 21C, then that fact also, details also to be given. Then share application I have discussed in detail. After 60 days, it will be treated as deposit. So I request members, please check your balance sheet. Any amount is held as a share application money and shares are not allotted beyond the 60 days. Okay. If it is less than 60 days, it is an exempt deposit. Okay. Then we have even nil return, it is compulsory somewhat. So please take care. DPT3 form should be filed. I have discussed on this 4 situation. Here you can see in the screen, purpose of the form. The first one is one-time return. That time period is already over. The second is return of deposit. In case your company has accepted any deposit from the public or members, then it comes the second option. Third is particulars of a transaction of company not considered as deposit. As per rule 21C, we have discussed in length and breadth about all the aspects just now. Then fourth one is the 2 category, return of deposit as well as the amount which is not considered as deposit. Okay. So that's about the DPT3. Now we are moving to the DR3, ICAI, DR3, web, etc. That is another compliance which we need to do it annually. Okay. Then the condition is that every director, because every year they have to this web check, that is updating their EKYC. Many of the companies are under the impression that I have taken the director identification number. Why you are asking these details every year? Okay, we have to convince them. Every year we have to give these KYC details to the MCA. Anyway, this is one of the opportunity for our social members to interact with the directors and getting some professional opportunities also for in this regard. Okay. So suppose a director who has already filed the details DR3, EKV, DR3, their address proof, identity proof, etc., then they can go for the DR3 KYC. In case any change in the address, etc., then they have to go to this route. Okay. Otherwise, just it is a very simple process to get a OTP in email and mobile and update the details. Please ensure that the passport is valid, the address proof which they are giving, like driving license, etc., not expired, please keep a documentation on that part. Okay, that's about the DR3 KYC. Let us move. What are the due date? Okay, one member asked me about the due date here, 30th September. Earlier, now every year before 30th September, we have to file the DR3 KYC. So maybe this is the right time to get the details of the directors of our all company and ask them to file this eKYC or DR3 form, because nowadays we are normally we'll be very busy with the income tax filing at this point of time. Now we are busy with trying to prepare the income tax filing, but we are not able to upload or something like that. So at this lean time, if it is a lean time for you, you can ask your clients to bring all these details. We have time up to 30th September, because presently the department is given the cutoff date of filing the income tax return up to 30th September. So both the due date may coincide if the income tax website is ready by that time. Otherwise, the DR3 KYC, you should please keep in mind it should be filed before 30th September. Okay. Even disqualified director also required to file the DR3 KYC. In case of a deed holder is a non-resident, foreign number shall only be foreign mobile number is allowed. Okay, signed by the applicant as well as certified by the chartered accountant, post accountant, or company secretary, etc. This form, we our CA members can also certify. What are the documents required in the case of DR3? Copy of Aadhaar card, copy of passport, proof of present address. This is the 3 documents required for that. In case we are not able to file it in the within the stipulated time, in marked as deactivated due to, we can see in the MCA side, it is deactivated due to non-filing of DR3 KYC. Okay. Then the further process is, once it is deactivated, you have to file it again and you have to pay rupees 5,000. That is the most burden, because the 5,000, when we say you have not filed the DR3 form, okay, fine. Okay, if we say a fee of 5,000 is paid, then company will say this is your fault, you have not intimated us. So please keep in mind that at least send a mail to your clients. Please update your DR3 form or KYC with the MCA before 30th September, so that nowadays, even though we are auditors, the companies are accepting. We will do entire thing of the company, from the preparation of the trial balance, preparation of the financial statement, audit, etc. Then directors income tax return, companies income tax return, all the aspects of it. Their expectation is very high. So it is better to send this mail. This is an information mail. So after that, they will feel better about our service also. Then this is about the MSME form. All companies who get a supplies from goods or services from micro and small enterprises, and whose payments to this micro and small enterprises exceed 45 days from the date of acceptance. Okay, if you receive a supply from the goods and services from a micro and small enterprises, if the payment to that supplier exceeded 45 days of the acceptance, then we have to file this return, MSME form. This is a half-yearly form. We are going to discuss on that. Okay, this the exceptional situations I am not discussing in details due to the paucity of time. At least please keep in mind that we have to file the MSME 1 form in a half-yearly basis. Now the definition of the MSME has been changed. Okay, this is the old definition. The micro, I have not go into the detail, let us move to the new definition. The micro enterprises means investment in plant and machinery equipment not more than 1 crore and annual turnover not more than 5 crore. Then it will be treated as a micro. Earlier it was 25 lakhs. Now small companies. Okay, small company in the new limit is investment in plant and machinery equipment not more than 10 crore and annual turnover not more than 15 crore. That is almost investment in plant and machinery, say 1 crore, you multiply it with 5. That is turnover is 5 crore. If it is a small, 10 crore and 50 crore, and if it is a medium, the plant and equipment, machinery equipment, etc., 50 crore, and annual turnover is more than 250 crore. This is the classification of the MSME companies, and they will get some registration from Udyam portal also for the proof of their MSME. In the case of service companies, the limit is a little bit changed. Plant and equipment 1 crore and annual turnover 5 crore. 10 crore to 50 crore for small and medium 50 to 250 crores. Okay. So this is about the service companies. Those companies which is renting service also, which also falls under the MSME. So let us first half, April to September, we have to file before 31st October. October to March, before 30th April. This time, due to the COVID, MCA has been relaxed, extended the time of filing up to 31st August. Okay. Then penalty, if company fails to furnish, this is a penalty for company and every officer in default is required to pay the penalty, 25,000, and continue failure, 1,000 per day. This is a penalty. So please keep in mind that apart from the DPT3, DR3, KYC, we have to file a MSME form in case you are accepting some supplies, goods or services from MSME units and you have failed to pay the amount within 45 days. Then let us move further. DR8, this is an intimation by a director. Every director should inform the company about his disqualification under DR8 form. Because in the audit report also we are mentioning that no director of the company is disqualified, etc. So please see the DR8 is obtained from the director every year. Okay. If they are disqualified because of the so-and-so reason, has not filed the financial statements or annual returns for a continuous period of 3 financial years. Many of the companies happening this, the directors are disqualified because they are directors of many other companies. Okay, it may not be in operation, so that company, the accounts may not be there, audit may not be there. They simply formed a private company and no activity has been happened, but they fail to file the financial statement for the continuous period of 3 years. Then they are disqualified to be the director of other companies also. Okay. And this is a situation, second situation is to fail to repay the deposit, the dividend, etc. So they are not eligible to be appointed director of that company for a period of 5 years. If they made this disqualification, they cannot become the director of the that particular company for a 5 years. So please get a direct DR8 when you are doing the audit process. Please check in the company law compliances whether company has obtained the DR8 from the director. Then some situation, this director become disqualification. Then the company is having some responsibility. So, okay, one director become disqualified. In such a case, company should intimate the registrar with the form DR9. Okay, within 30 days of such failure. Okay. Then similarly, removal. DR10 is the form for the removal of the disqualified director. Okay, let us move further to the next form, AOC2 form. That is about the related party details. The important points here: details of the contract or arrangements or transaction not at an arm's length price. Similarly, material contracts transaction within the arm's length price. Those should be obtained. Signed person who has signed the board report. Okay, this is forming part of the board report. Let us just quickly go through the definition of the related party. The definition, which we have to take it from the section 276 of the Companies Act, where the director or his relative, key manager person or his relative, of firm in which director, manager, his relative is a partner. Firm in which director, manager, or his relative is a partner. Private company in which director, manager, or his relative is a member, director. Okay, public company in which director, manager is a director, and holds along with the relatives greater than 2% of the paid up share capital. These are the definition inside. Then any body whose board of directors, MD, etc., accustomed to act according to the direction of the director or manager, any person who said that direction, said director, manager. Then, of course, holding company, subsidiary company, associate company, etc., is coming under the related party. So, in the AOCT form, we have to disclose if these related parties are coming under, whether it are under the arm's length price or not at the arm's length price, we have to give the details. Just keep in mind, section 276, the relative definition is to be taken care of for this part. The relative definition is there in our AS also. So in this particular case, we have to take the color of the relative or definition of the relative from the section 276. Then disclosure of interest by directors. Every director, this is a yearly activity, shall disclose his concern or interest in any companies whose body corporate individual give notice writing in MBP form. This is a form MBP. This should be given to the company at the first board meeting in which the director participates as a director after the post appointment, or at the first board meeting in every financial year. Every financial year, in the first board meeting, please ensure that this agenda is there. Director has to give the MPP form MPP form to the company. Many of the companies we are auditing, we are finding that during the compliance check under Companies Act, this DR8 not there, MPP one is not there. If we insist, they may say, sir, we'll get it the next time. Anyway, now the time is a difficult time. So don't give any excuses, because the ROC or MCA now coming with a scrutiny center. Now they are taking all the forms for the compulsory scrutiny for a selected form. So they have a centralized scrutiny center, CSC. Anyway, please ensure that under the company law compliance, the MPP form is obtained from the director and should be placed in the first board meeting where immediately after he becomes the director, or the first board meeting of the every year. Maybe it may be in the year, every year, the April we might have been conducting any board meeting, then that also will be part. Okay. Then sometime we are not interested in any firm or company, but after some point of time, we become a part of the firm or company in which we are interested. Okay. In such a case, immediately after knowing that fact, we have to disclose this to the company. So please ensure MPP one is there. Okay. I'm please keeping this point because many of them may be seeing this. Then let us move to the event-based compliances. I am touching upon some of the event-based compliances. What is appointment of auditor, then filing of some resolution, then creation of modification of satisfaction of charge. This itself, it's a one technical session of 2 hours. Still, I am just going through the glimpses of this creation, modification, and satisfaction of charge. Then, of course, alteration of share capital. Many companies changing their share capital, enhancing or dividing their share, 1,000 rupees share to 10 rupees, 1 rupees, etc. Then all this, then change in directors, registration for under CSR activities. This is the first thing. The 6th point is the now if you are doing some CSR activity through some entities, then we have to get the registration from by form CSR1, then commencement of business. Many cases earlier this was earlier Companies Act, it was applicable to the public company only, but after the new act from 2019 onwards, this is compulsory even for the private company. Okay, then change in registered office. These are the some of the event-based compliances. I am quickly going through that just to get an idea about it. I know you are all following this appointment of auditor ADT1. Okay, then first auditor shall appointed board of directors within 30 days. Okay, please keep in mind it should be there within 30 days. I am emphasizing this point here because many of some of members when I contact me, they fail to do this. Okay, so once you incorporated the company, please see that board of directors is appointed within 30 auditor within 30 days of the. Okay, then if it is not happen, we have to go to the extra general meeting. Okay, within 90 days, etc. Then subsequent, I'm not going the details. The 5 years appointment, everyone know about the changes happening. Okay, these are the attachments for this form. Consent from the auditor, we have to give a consent from the auditor. Then resolution, etc. Then casual vacancy. Sometimes the casual vacancy may happen. Okay. And it should be filled by the board of directors within 30 days. Due to various reasons, the casual vacancy of the auditor may happen. Then within 30 days, board is required to appoint the auditor. Okay. The second part is, if such as a result of resignation of the auditor, such appointment shall be approved by the company at a general meeting convened within 30 days. 3 months, sorry. 3 months, okay. Here, why I'm emphasizing the second points of the extra general meeting for 3 months. Many cases, the audit, we may resign from the auditorship. Okay, we are safe. Okay, the next auditor taken charge, but board has been appointed. In some of the cases, I am practically seeing that this general meeting, extra general meeting, is not conducted for ratifying this appointment. Okay, this is one of the point I would like to emphasize. In case the casual vacancies happen due to the resignation, the auditor signed who has resigned from the company, that responsibility is casting upon our auditors to file the ADT3 form. Okay. Many cases, even though earlier law it was there, even though we resigned, no form is required to file the ROC. Now, if you resign, the auditors is required to file the ADT3 form within 30 days from the resignation. Okay. The responsibility to file the ADT1, that is appointment, is rest with the company, not the auditor. Okay. Filing the ADT3, the responsibility, that is after resignation, the responsibility lies with the chartered accountant. That is auditor, sorry, auditor. Then filing the resolution MGT 14, special resolution, etc. I quickly go through this area. Resolution, you know, in the case of privately limited companies, resolution, if any, passed under section 179(3), it is not applicable. Okay, within 30 days. The due date is within 30 days, then penalty. I'm not going to the penalty, etc. Then creation of charge. Okay. If company creating a charge on its property or assets of its undertaking, whether tangible or otherwise, situated in India or outside, shall register charge. Okay. Then satisfaction also should be charged. These are the applicable forms. Form CHG1. Okay. Once your asset or property is created charge, please remember we have to file the form CHG1. Okay. For the modification also, the form number is CHG1. Okay. In the case of creation modification charge for the debentures, some companies might have the debentures and secured debentures. In such a case, that form should be used with CHG9. Okay. Of course, many times we fail to file the satisfaction of the charge. The client might have been received the loan from a bank and they repaid and closed the loan. But please remember that you have to file the satisfaction of the charge in form number CHG form. I am emphasizing this point because many companies, sometimes they are striking off or they are handing over the company to the other person during the due diligence. It is found that they created the charge with the CHG1, but even though it is satisfied, the CHG form not filed. So please remind that once you have filed the CHG1 for the registration of charge, you have to file the CHG for the satisfaction also. Okay. CHG1 30 days from the creation, CHG4 30 days from the satisfaction, etc. Okay. For the satisfaction, we have to get a letter from the charge holder, like we have to obtain the letter from the bank. Suppose you are created charge on behalf of the company for mortgaging some of the assets. Once the loan is repaid and satisfied, you get a letter from the bank, and using that letter as an attachment, you have to file the CHG form. Okay, that's about charge. Okay. Then I'm not touching upon the penalty. Anyway, I'm sharing this presentation to the organizers, so you can get that. Then this is the alteration of the share capital. That is, many times, even though share capital has been altered, some cases we miss to file the SH7. That is a form for filing the alteration. The situation may be increasing of authorized share capital, consolidating and dividing share capital. One of cases happened. The share value, equity share value was 10,000. They subdivided into 10 rupees. Okay. Instead of 10,000 equity value of the share, say 1,000 shares of 1,000 shares, 10,000 value, that we can come down to 10 rupees or 1 rupee like that. They have come down this value, but fail to intimate the register of forms with SH7. Then later point of time, when the company is going to take over by some big institution, during the due diligence only, they find this fact. So please remember, if some of the situation, if increase in authorized capital, consolidate and divide share capital, convert fully paid share into stock, reconvert the stock into fully paid shares, sometimes subdivide the shares, a smaller amount, which is I just mentioned, canceling the shares, etc. Then you have to file the SH7. Okay. Then sometimes the debenture may be convertible debentures. In such a case also, then redemption of, sometimes we might have been issued the preference shares and we might have been redeemed the preference shares after the 3 years or 5 years, whatever may be the PD of issue of the preference shares. Still, you have to file the SH7. Then only it will be noted in the register. Okay. Then that's about the 13 days. And please keep in mind that before filing the SH7, you need to file the MGT14 also, and you have to give the SRN of the MGT14 in the form SH7. So this is one of the situation where before the filing SH7, form, you have to file the MGT form for it. Okay. So I'm not going the details of the attachment. It is already there in the form and penalty. I'm not going. Okay. Now let us just discuss about the change in director or key manager person. Okay. Please ensure that DR12 has been filed. Okay. Appointment of every director or key manager person KMP. Any change in director or KMP. Resignation of the director or key manager person. Please ensure that DR12 has been filed. Some occasions or many occasions I have seen that the director might have been resigned and gone from the company. Still, he is in the director of the company because company is not filed the DR12. Plus, please ensure that if any change in director is happened, file DR12. It can be appointment, it can be resignation, etc. You have to file within 13 days. Okay. Then, in the case of resignation, 13 days of receipt of notice of directors or information, etc. Then consent in form there. Every who has been appointed to hold office director shall before appointment furnish a consent. Okay. This is about getting a consent from the director before he become the director of a particular company. So in order to become a director of company, the prerequisite is get a consent letter from the director is one of the requirement. Then disqualification, DR8, that is one of the other requirement. Then also he has to disclose his interest in the first board meeting. This is one of the condition for why become the director. Then DR11. Okay. Earlier, this was the dispute. The director might have given the resignation. The company will hold the resignation with the company. There is no way to intimate the ratio of companies from the side of the director. Some directors, they, especially in the GT company or some NBSC company, they will send a letter to the ROC, etc. But as per the new Companies Act, they brought one form DR11, where the director who is resigning his office, he can file a return with the ratio, that is DR11, within 30 days with his copy of resignation, etc. So, in case company is failed to file resignation in DR12, still this director is safeguarded by filing the DR11. So, when you take a case of your company, resignation of a director, please see that DR11 is filed by the director and DR12 filed by the company. This is a two form we should take care. Once the company director is resigned, he should file his resignation to the registrar of companies within 30 days, inform DR11, and company should inform in DR12. Just now we have discussed a lot on DR12. Okay. I'm not going to the details of the attachments. Now move to the corporate social responsibility, which we discussed a short while ago. Here, this CSR is applicable only when net worth rupees 500 or more. Okay, that is one condition. Turnover 1,000 crore or more, or net profit of 5 crore or more. This is the three conditions. 500 crore or more is the net worth, or turnover 1,000 crore, or net profit is 5 crore. This is the condition for a company coming under the corporate social responsibility. Okay, they have to spend 2% and a lot of changes happen in there. I'm not going to the details of that changes. I'm touching one point here. In the case of corporate, your company is coming under the corporate CSR, and that activity is carrying out by any of the entity, like some 2LA registration company, etc., Section 8 company or NGOs, then that company is required to get a registration, or they have to file a form called CSR1 with the registrar of companies. Okay, this is applicable from 1st April 2021. So please bear in mind that this particular change, suppose you might have been auditing some trust or Section 8 company or NGO having 12A registration and 80G registration for a track record of 3 years and etc. and so on. They have to get a registration from the or file a CSR1 form with the register of companies. Okay, please keep in mind that if it is done through any outside agencies. Okay, so that's about the CSR. It is applicable to the companies where 500 crore net worth, 1000 crore, I am going again, turnover 1000 crore and net profit 5 crore. If this criteria is meeting, then only it will come in under this case. Okay, then registration CSR1. So please keep in mind that you have to file CSR1 form for those entities. It may not be company, it may be your trust or NGO who is doing some CSR activities of the other companies, then you have to get it. Okay, I'm not touching these details now. Anyway, I'm sharing these details with you. Then commencement of business. It is happening occasionally. Many of the, after this 2019 amendment, even for the private company, this is applicable. That is Form INC 28. Commencement of business. Okay, a company incorporated having a share capital shall not commence any business or exercise any borrowing power unless a declaration is filed with the ROC in form number INC 28. Okay, so please note down INC 28, the commencement of business. In case you have formed a company, please note down some of the timelines there to file the commencement of business, whether it is a public company or private company. Okay, this is applicable those companies which is incorporated after 12th January. Okay, that's about the INC 20. Then it has to be done within 180 days of its incorporation. Okay, please keep in mind that it should be done within 180 days. During the last year, due to the COVID, they have given some relaxation, and this year also we already get some relaxation. So please keep in mind that INC 28 should be filed within 180 days. Then next is the registered office, change in registered office. Many times when we are looking at the master data, registered office of the company is in one place. Okay, company is actually doing the business in other place. So please, this is just because of we are not filing the INC 22 with the register of companies. Okay, anyway, we are during the incorporation, you have an option to file the registered office within along with your fixed form, or you can do it later also. Okay, after within 30 days of incorporation. Okay, any change in registered office, you should intimate the company, ROC within 15 days of the incorporation. Okay, verification within 30 days of okay, fine, you date. So INC 22. Okay, if your company has incorporated SPICE form and not intimated the registered office, you should do it in a 30 days time frame. Okay, if any change after that, you have to do it within 15 days of the change. Okay, that's about the important points. INC 22. I'm not. Now let us move to the basic compliance. Now just touching about the annual general meeting, board meeting, president, director, name board. These are some of the other compliance which may. Okay. AGM. Just touching about this time gap between two AGM should not be more than 15 months. In case of what AGM, it shall be within period of within 9 months of the date of closing the financial year, etc. In case of subsequent AGM, okay, this you may be aware of this. Still, for a quick recap, I'm giving these details. 21-day clear notice. If in the case of private company, if shorter notice is there, it is Okay. Otherwise, at least 95% of members entitled to vote meeting has to give the consent. Okay. That's about privately limited company. This particular clause is not applicable. 21 days clear notice is required. In the case of the company which you are auditing is a privately limited company, please see your articles of association. If it is mentioning the lesser number of days, that will be that he has to take it. Then AGM, annual general meeting through video conferencing. This year also, MC has been allowed us to carry out the virtual meeting of the annual general meeting. Okay, that's up to 31st December 2021. We have enough time. So if due to the COVID and related restrictions, if you are not able to conduct the physical meeting of your members, you can go through the AGM through video conferencing or other visual audio means. Normally the NSDL and the CSDL is giving the technical support to the companies to do this virtual meeting. For companies, two type of methods are there for those companies with e-voting facilities and those without e-voting facilities. Almost similar methods are there. All these technical support, many of our companies are this virtual meeting is organized by the CDCL. The technical platform is given by the NSDL or CDCL. Both are doing exceedingly well. So you can approach the board meeting. Just I wish to bring your notice about the board meeting. First board meeting should be within 30 days of incorporation. Okay, so once your company is incorporated, please ensure that board meeting is happened or the date of first board meeting within 30 days of incorporation. Okay, the subsequent board meeting, minimum 4 meetings should be there every year with a gap of not more than 120 days between 2 consecutive board meetings. Okay, this year some relaxation has been given. Okay, the gap between this board meeting can be 180 days. Okay, for example, if you have conducted a board meeting in April 1st or 2nd, you can go up to 180 days. That is the second quarter, you can go up to 180 days. That is up to 18th September. Okay, so that is a one relaxation. Otherwise, please keep in mind that the minimum we have to conduct for board meeting, the gap between 2 board meetings should not be more than 120 days. This year and last year it was they given 180 days. Okay. Board meeting now it can be conducted through virtual mode. Okay, I'm not going to the details here. In the virtual mode, the board meeting, the following, the mentioned here, the approval of the financial statements. The last year it was not possible. Now they have relaxed. Through the virtual board meeting, we can approve the financial statement, we can approve the board report, we can have the audit committee meetings, approval of the matter relating amalgamation, merger, demerger, acquisition, takeover, etc. This can be done through the virtual mode. This recently this notification came June 2021. So don't worry, your approval of the financial statements also can be done through the virtual mode. Then notice of board meeting 7 days normally. Okay, I'm not going to that. Then the latest change is about the resident director. Every company shall have at least one director as a resident director. Resident director not less than 180 days during the financial year is in India. Okay, that is the condition. The minimum residency period has been this year it is not applicable due to the challenging time. Sometime they may be work in Middle East, they may not be able to come back. So this year this minimum residential criteria is not there. Okay, that about that. Then I'm just touching about the name board. Many companies not exhibiting their name board, so please exhibit their name board in the letter reports, bill letter, etc. You have to prominently give the corporate identification number, telephone number, if any, email, etc., website, etc. Okay, I have put all those details here. So in case you have letter pad, please see that company's corporate identification number is there, email ID is there, all these details should be there. Okay. Then Hyundai's promissory note, etc. That details. Just please see the name board, at least name board has been exhibited there. Okay. I'm just briefly going through this compliance register. You know, we are immediately after incorporating the company, we are getting the combined statute register from third parties to the company, or they ask the company whether you need these registers. That register will contain all these details. Okay, register of members, register of debenture holders, index of members, register of index of beneficial owners. Okay, foreign register, etc. Here, why I'm mentioning here, if you go through the compliance check of this accuracy and updation of this registers, you can see it won't be up to date. In the case of register of members, new shareholders might have been increased, transfer of shares must have been happened, company may not, or out of the companies which we are auditing, 90% of companies not up to date about these details. Register of debenture holders. Okay, even though debenture is repaid, still list of debenture holders are there. So please keep in mind that I'm just rushing through the sweat equity may not be there, stock option, register of security, register of deposit. In case you have a register of you have a deposit, you have to maintain the register of deposit. Registration of charge. Most probably, almost all companies, I'm not talking about the larger company, I'm talking about the small companies which we are auditing, where all these companies are owned by the family owned directors and shareholders, a husband and wife, got children, etc. In such a case, many of these compliances may not be there in that company. So please ensure, at least you give a letter, you have to update all these things. Okay, register of charge, the register of guarantee, etc. These are the some of the registers. Okay, you can go through this presentation and you can okay. Then we are just touching upon the additional fee. The concern was immediately in the month of April, the lockdown happened, and many offices have been not able to operate. Then MCA brought a relaxation to the companies. You need not pay the additional fee. Okay, that is all those forms falling between 1st April to 31st May. Up to 31st July without any additional fee. My understanding is it is has to 31st August. Then in the case of charge also, that relaxation stays there. Those charges created between 1/4/2021 and between 31st May 2021. Okay, that period will not be counted for this 30 days, 60 days, or those limit for filing the return. So all those period between 1st April to 1st June, that is up to 31st May, will not counted for the purpose of taking the numbers under 77. Okay, so it is there for the charge document also. I'm not going into the details. Okay, we need to have some time for the question answer. Okay. These are the some of the forms. I'm quickly rushing through the forms for which this additional, earlier they have just mentioned additional fee is not there. Then they, in a piecemeal, they have introduced many of the forms, and right now it is about 53 forms in this category. Okay, so this additional fee relaxation is up to these forms. And moving further, so this is about the additional fee, And so I think we have only 10 or 50 minutes. So I'm just briefing all those in a shorter way. So we have a basic compliance, we have annual compliance, we have event-based compliance, and we have other compliance. Please note down all these compliances and ensure that your company is doing all these compliance as per the Companies Act, so that you will not find any difficulty in auditing your client. Apart from that, the client become more responsible, because many of the event companies, they are not bothered about the audit and other things. They are just thinking about everything will be done by the auditor. They are thinking the trial balance is ready, the preparation of the financial statement is with the auditor, etc. You know, that is not the case. Okay. Anyway, please update your client. Please inform your client about the changes and see that they are also making the proper corporate governance. Anyway, you know, the change is only the constant nowadays, as rightly mentioned by the Charles Darwin. It is not the strongest of the species that survive, not the most intelligent that survives. It is one that is most adaptable to changes. You know, this is the era of technology. There are a lot of technologies coming into the picture of the auditors or our accounting portion. As per the World Economic Forum, our accounting portion is one of the vanishing portion they mentioned in their report. A lot of artificial engineering, robotic process automation, then cyber security, blockchain, and many things are happening in area where we are auditing the entities. The way in which we are doing the business is also changed. You can see maybe 3 years back or 4 years back, there is no Byju's app. Now Byju's app is the 1 billion company. Similarly, many companies are like that. Instead of brick and mortar model, they are all here in a virtual platform. So with this, please, I am sharing this presentation with you. I'm very happy to take the questions from each one of you, so that I will be also learned more. Thank you. Thank you, Chairman, for giving this opportunity, Rajneesh and Praveen Narayanan, all to organizers.
Thank you, sir. Thank you. Thank you. It was a wonderful presentation. Now the floor is open for the question and answer session. If any of the participants is having any questions, you can unmute yourselves and ask the question directly to the faculty. Please keep in mind one question at a time.
SONY, the deposit
Yes.
received by a Nidhi company. Which bubble we have to select? Second one or third one?
Yeah, here, this about the NBFC and Nidhi company. The Nidhi company is already coming under the footing. It is supposed to be regulated by RBI, and it has separate portions. Many of the experts saying that Nidhi company is not required to file the DPT3. Same time, for a safer method, some of the companies also filing the DPT3.
It is mentioned.
In the case of NBFC, yeah, Nidhi company, yeah. So it is a safer
So
side.
in that case, if any amount received by the Nidhi company, we have to file the DPT3, right?
Yes. You have to file the DPT3. In the case of NBFC, it is not required.
No, what I am asking is which bubble we have to select, as a public deposit or Rule 21C?
21C, those cases which is fall under the 21C, you can select that one. Okay, those situations which we had discussed. Okay, apart from those cases, it will fall under the deposit. That is return of deposit. So you can safely do fourth bubble. Return of deposit plus return of deposit exempted under 21C.
Okay, sir. Thank you.
Anyway, many members has been joined this program. I can see many of the past chairmans and senior members has been joined this program. I'm very happy and for that, because even this busy time, I know you are busy with the filing of the income tax return, ROC forms. You are here and spent almost more than 2 hours here in a virtual mode. Thank you very much for joining with me and sharing these details. And in case you have any further questions after this also, you can give me. I have shared my mobile number and email ID with you. You can contact me at any point. Right. Okay. And I express my sincere gratitude to Alappuzha branch. Yeah, please.
Martin asked one question initially. Can you?
Okay. Let's check. Okay. 1 minute. That is about the related party. That is a director is a relative of a company. Okay.
Yes, sir. Yes, sir.
Okay. In such a case, it is purely coming under the prohibitory section. So, in my view, it cannot be. But in some of the cases, in the case of private company, some relaxation is there. That details I will give you in offline. Okay. In the case of public limited company, it is not possible. In the private limited company, I will give you the details later. Okay.
Okay, sir. Okay.
In your case, the director is a director in the company, and the company would like to give a loan to the
partnership firm,
partnership
in which he
firm
is a
in
partner.
which he is a partner. Okay. So it is a related one. Okay.
Yeah.
Okay. In the case of public limited company, it is purely prohibited. In the case of private limited, I can see some of the relaxation that I will share you offline after seeing the further details. Okay.
Okay, sir.
Sir, also in Nidhi company, we have to attach the auditor certificate, right?
Yes.
Sir, do you have any format of?
Yeah, I can share you the auditor certificate. I can
Okay,
share
sir.
you the auditor certificate. Well, when I am sending this presentation, I will share the auditor certificate also.
Okay, sir. Thank you.
Okay. Any other format or anything is required for the members, I am very happy to share that also.
Thank you, sir.
Okay. That you can let you know later also. I think we are almost reaching the 7 o'clock. Once again, I extending my thanks to both branches, Alappuzha and Kollam, and my close friends, Rajinish and Praveen Narayan, and their managing committee members. I can see many of my close friends are here. Prasanna Varma, Prasanna Kumar, then Uday Varma, Malayil, Anthony Malayil, and many more, even in the Sudhakaran sir. I'm not naming at all everyone. Thank you everyone for joining this program, and extending my sincere thanks to each one of you for you giving me a wholehearted support and encouragement of all my professional endeavors. I seek your continued blessings and support in future too. Thank you very much.
I request Martin to propose formal persons.
Respected Chairman of Alappuzha CA Rajinish Murthy, Chairman of Kollam Branch CA Praveen Narayan, Faculty of the Day CA SONY CL, and my dear fellow chartered accountants. In fact, what I notice is that even though we are very much thankful to SONY CL, he expressed his gratitude to us many times. It shows his it clearly shows that he's a very humble person and a person with a lot of knowledge and with humility. So we are sincerely thankful to you for sharing this much of time with us. Even though what I noticed is that you went into the details in a you went into the nitty-gritties of these provisions. Many of these provisions were not noticed by most of us, but this session was very useful. We all are very much thankful to you. I also express my sincere gratitude to the people, the fellow chartered accountants who joined for this virtual meeting. We will conduct another seminar in the next month very soon, and we will let you know the details. Until then, goodbye. Thank you very much.
Thank you, Martin.
Thank you, sir. Thank you.
Thank you, Praveen. Thank you, Rajneesh.
Thank you, sir.
Thank you.
Now we will stand for national anthem.
पंजाब सिंध गुजरात मराठा द्राविड उत्कल बंगा विंध्य हिमाचल यमुना गंगा उच्चल जलधि तरंगा तव शुभ नामे जागे तव शुभ आशीष मागे गाये तव जय गाथा जन गण मंगलदायक जय हे भारत भाग्य विधाता जय हे जय हे जय हे जय 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 हे
Thank you, one and all. Thank you.
Thank you, sir.